Good morning, students. How are you all? Hope you all fine. Ready to learn accountancy? You take your book and textbook and notebook in front of you. We are in the last stage of this third lesson. Okay, interest on loan from partners. So we know that already we have learnt about this interest on loan. If the partnership deed is silent, what we should do with the interest on loan? Here, not many questions are asked to calculate the interest on loan. Here we know sometimes the partners will advance some amount. Okay, that we can call as loan or advance. For this amount, they may prefer to get some interest on the amount that they have advanced to the partnership firm. So this may be agreed in the partnership deed. Okay, if the partnership deed is silent, even then what must be paid as a loan? 6% of the loan amount is paid as interest on loan. Already we have learned, isn't it, this one? Then all the even interest on capital drawings do not need to pay, but interest on loan must be paid at 6% per annum even if the partnership deed is silent. We have already learned that one. This is as per the section 13D of the Partnership Act, Indian Partnership Act 1932. Indian Partnership Act 1932. As per this section, section 13D, the 6% of the interest must be given to the partners, one who has advanced loan to the firm. Okay, here we should have two entries. One is for the providing interest on loan. Providing interest on loan. Since interest on loan is an expense for the firm, that must be debited. Okay, interest on loan account debtor, the interest on partners loan. Debtor to partners loan account. Here till now we have learnt that it will be transferred to either partners capital or current account, isn't it? But only this loan, interest on partners loan will be credited along with the loan account, not to the partners capital or current account. Okay, now this one we can write here interest on loan provided. Or due, whatever you can write. Okay, provided or due. Then we need to transfer this interest on partners loan to profit and loss account. Okay, not profit and loss appropriation account, because this one, even if the company has, the company firm, even if the firm has profit or loss, this interest on loan must be given to that particular partner. So it should be transferred to profit and loss account. So profit and loss account must be debited to, we need to credit this interest on partners loan account. Interest on partners loan account. And you can write interest on loan transferred to profit and loss account. Interest on loan transferred to partners loan account. Okay, only two entries for adjusting transparent. Okay, or interest on loan adjusted, provided, due, whatever words you can use. Here interest on loan transferred to partner's loan account. So then we will, in the balance sheet, how we will show this one partner's loan, we will add this interest on loan along with the loan. Okay. Now the last heading we are going to learn in this chapter. Okay, that is division of profits among partners. Division of profit among partners. The last stage we have transferred, we have given interest on capital. If there is interest on capital, interest on drawings, then salary, commission, whatever it is, we have adjusted in the profit and loss appropriation account. That must be transferred to partners capital account in their agreed ratio or equally. Okay. So for this purpose we need to prepare one account that is called profit and loss appropriation account. Profit and loss appropriation account must be prepared. It is a T account. T account means 2 pages. Okay. On the debit side, left hand side, we will adjust. First we will start this account with the profit. Okay, net profit. That means profit by profit and loss account. By profit and loss account. Then it must be credited with the interest on drawings. Interest on drawings. Then it must be debited with, if it interest on drawings credited, we need to debit interest on capital, isn't it? Interest on capital, then all the other expenditure. Any salary, that means partner's salary. Then any commission, partner's commission. Then after charging this 3 expenses, here one, that income, then the balance will be transferred to partner's capital account or current account. If it is profit, partner's capital account must be credited, isn't it, to partner's capital account or current account. Why current account? If they follow the fixed capital method, current account. If they follow fluctuating capital method, we should transfer that one to the partner's capital account in their profit sharing ratio. Okay. So usually they will ask one problem, maybe for 3 marks, or along with the entries they may ask for 5 marks. Okay. If it is loss, it will come this side. Okay, by partner's capital account. Then partner's capital account must be debited. Here we have to prepare the journal entries. If they ask for journal entries, we need to prepare. Okay. First adjusting entry, transfer entry for each one. Interest on capital. Already we learned this entry, isn't it? Adjusting entry, transfer entry. Even now we studied, the interest on loan, partner's loan we have learned. In the same way, we need to write the adjusting entry and transfer entry for all the adjustments. Then we should prepare this account, calculate the profit and transfer that one to the partner's capital account. That's all. Okay, we will see the illustration. Illustration 21. Hope you all have understood this explanation, isn't it? It is very easy one. This lesson itself is very easy. Arulappan and Nallasamy are partners in a firm, sharing profits and losses in the ratio of 4:1. On 1st January 2018, their capitals were 20,000 and 10,000 respectively. The partnership deed specifies the following. Interest on capital is to be allowed at 5% per annum. Interest on drawings charged to Arulappan and Nallasamy are 200 and 300 respectively. The net profit of the firm before considering interest on capital and interest on drawings amounted to 18,000. Give necessary journal entries and prepare profit and loss appropriation account for the year ending 31st December 2018. Assume that the capitals are fluctuating. So we have to transfer everything to the capital account, not current account. Okay. Now they have asked to prepare journal entries, then prepare profit and loss appropriation account. Okay. First we will write the journal entries. First what we should write? The number of the question, isn't it? Number of the question 21. Then heading, journal entries. First we will write in the books of, isn't it? Here no need, okay, in the books of, no need. Simply journal entries we will write. Okay, date, particulars, LF, debit, credit. Okay, rupees. Now date, what is given there? 1st January 2018. The last one, the last line ending 31st December 2018. So 2018 December 31. First entry, what is the first adjustment? Interest on capital is to be allowed at 5% per annum. So interest on capital is what? It is an expense. So interest on capital account debtor to partner's capital account, isn't it? Current account, because the last line it is given fluctuating. Assume that the capitals are fluctuating. So since it is fluctuating, we have to write capital only, not current account. Okay. Two partners. First one, Arulappan's capital account. I write shortly. Okay. Then Nallasamy's capital account. What we should write? Interest on capital provided. Interest on capital provided. Now we should calculate the interest on capital. How much is the percentage? 5, isn't it? Then 20,000, 10,000. How much? Here I am showing, okay, how to calculate, but you don't write here when you do the problem. 20,000 into 5 by 100. So 2 5s are 10, 2 0, isn't it? 1000. Sorry. Arul's capital, Arulappan's capital, 1000. Then for Nallasamy, his capital is 10,000 into 5 by 100. 2 0, so 500. So 1,500. Okay. Now this must be transferred to profit and loss appropriation account. So interest on capital should be credited because now it is debited, we need to credit. Okay, so what should be debited? Profit and loss appropriation account. The same date. Okay, 31 you can write. Profit and loss appropriation account debtor, you should write fully. Okay, to interest on capital account. So interest on capital transferred 1,500. Okay. Now the next line, next adjustment, what it is? Interest on drawings. Interest on drawings is an income for the firm, isn't it? So that must be credited and capital account must be debited. So at the date first we will write 31. Partners capital, the Arulappan's capital account. Arul's capital account debtor. Then Nallasamy's capital account debtor. To interest on drawings account. Interest on drawings charged. After this charging entry, we have to transfer that interest on drawings to profit and loss appropriation account. Since we credit this interest on drawings, we should debit, and profit and loss appropriation account must be credited because it is an income for the firm. So what is the entry? Interest on drawings account debtor to profit and loss appropriation account. Interest on drawings transferred. Here amount, the total 500. Then one more entry we need to write after preparing the profit and loss appropriation account. Okay. Profit and loss appropriation account must be prepared. It is an account, so we have to use 2 pages. Okay. Debtor, creditor, 2 pages we have to use. Then we should credit with profit and loss account by profit and loss account. What is the amount given? The C, adjustment C given. No? The net profit of the firm before considering interest on capital and interest on drawings amounted to rupees 18,000. That you write 18,000. Okay. Then now we prepared the adjusting entries, isn't it? What we have transferred to profit and loss appropriation account. First, interest on capital we have transferred, isn't it? See the entry, profit and loss appropriation account debtor to interest on capital. So we have to debit the profit and loss appropriation account. with interest on capital. To interest on capital. How much? 1,500. 1,500. Then next one here. Profit and loss appropriation account credited by interest on drawing. So profit and loss appropriation account is credited. So credit side by interest on drawings. Interest on drawings. How much? 500. Isn't it? So only 2 items. Now we should find out the profit or loss. Here only more, isn't it? So 18,500. Now 17,000 we will get, isn't it? So that must be transferred to partner's capital account. So partner's capital account. We should write the partner's name here. Okay. Arulappan. Then Nallasamy. Now 17,000 we will get. We need to distribute in the profit sharing ratio. What is the profit sharing ratio? Where it is given in the first line, isn't it? 4:1. So 4:1 means 4 by 5, isn't it? 4, then 4 plus 1, 5. Now you divide this one. 5. 3 5s are 15. Remaining 2. 20. 4 5s are 20. Then 2 0. 4 4s are multiply and write. Okay, 4 4s are 16. Balance 1. 3 4s are 12. 12 plus 1, 13. Then the remaining for him, isn't it? 1 means 3,400. You add and check, we will get the same amount. Okay, so 13,600, 3,400. Okay, this is the profit and loss appropriation account. Very simple. Sometimes they will ask for 3 marks. Only the profit and loss appropriation account to prepare, or to prepare the journal entries. Okay, now we have to complete the journal entry, isn't it? Here we have prepared and completed. Now we have to write this in the journal entries form. So what is which is debited? Profit and loss appropriation account debtor. Debtor to whose accounts credited? Partners capital account. So who are the partners? Arul's capital account to Nalasamy's capital account. Amount here 17,000. Arulappan's 13,600. Nallasamy 3,400. Okay, now profit transferred. Okay, now journal entry is completed, account completed. Now one more illustration is given there. We will try to do that. Okay, I will read out. Giving some more adjustments. Durai and Velan entered into a partnership agreement on 1st April 2018. Durai contributing rupees 25,000 and Velan 30,000 as capital. The agreement provided that profit and losses to be shared in the ratio 2:3 as between Durai and Velan. Partners to be entitled to interest on capital 5% per annum. Interest on drawings charged Durai, Velan amount given. Durai to receive a salary 5,000, Velan a commission of 2,000. See, firm made a profit 20,000. before adjustment of interest, salary and commission. Prepare the profit and loss appropriation account. So only the appropriation account we need to prepare. Okay. Here we need to write the heading, then the particulars. Divide 2 pages we have to use. Okay. First write the number. Okay. 22. Profit and loss appropriation account. Account. For the year ended. Okay. Ended 31st. When it is starting, start 1st April 2018 they have started, isn't it? So it will be ending 2019 March. Okay, 31st March 2019. Now here particulars, rupees, particulars. Okay, date also will come there. Okay, now it should be credited with the profit by profit and loss account. How much is the profit? Where it is given in the last paragraph. During the year, the firm made a profit of rupees 20,000. That 20,000 we should write. Okay. Then A, sharing ratio given. B, you see, partners to be entitled to interest on capital. So what is the entry? We should debit the interest on capital to interest on capital. Here we can show separately. Okay, the partners interest on capital 5%. So who is the first partner? Durai. How much is for Durai? 5% on his capital. Durai contributing 25,000 into 5 by 100. So how much he will get? 25 into 5, 125, 10, isn't it? Then Velan, what is his capital? Opening capital 30,000. So for 30,000, same 5 by 100. 3 5s are 15, then 20. Okay, then C, adjustment, interest on drawings. Amount is given, it must be credited, isn't it? So by interest on drawings. Interest on drawings. Same name you have to write. Durai Velan. Amount is given 300, 450. Okay, since you have 2 pages, you can write this amount in the inner column and you can write in the outer column. Okay, since I use the same page, I am writing on the outer column. Then D, the right to receive a salary, that is also expense, so we need to debit to salary to Durai. How much? 5,000 for the year. Then E, D. Now E, Velan to receive a commission. So to commission to Velan. 2,000. So all the adjustments over? Yes, isn't it? Now we need to calculate the profit. Total on the credit side is more, isn't it? So we have to leave space and write the total amount. Here, to 20,750, isn't it? Now, here you can find out. Okay. Or with the pencil you can find out. Okay. 0, 5 plus 5, 0, 5. Okay. Then here 5 plus 2, 7, 0. Then fourth digit 2, 7, 9. 9 plus 1, 10. Balance 1, 1. Isn't it? So 11,000. So this 11,000, how we have to write? To partner's capital account. We have to credit the partner's capital account. Durai. We need to calculate, isn't it? How much? Here only I am showing. Okay, 11,000 into which ratio? 2:3. A, adjustment A is given, isn't it? Profits and losses to be shared in this ratio 2:3. So 2:3 means 2 divided by 2 plus 3, how much? 5. So now you simplify. 1 5 is 5. Here 2 5s are 10. Balance 1, 10. 2 5s are 10. Then 2 0. Then 2,200 into 2, 4,400, isn't it? Then for Velan, here 2,200, then 3, 6,600. So he will get 11,000. They will get. Okay. Now the profit and loss appropriation account gets over. The next problem is there, just I will explain to you. Richard and Rizwan started a business on 1st January with the capitals of 3 lakh and 2 lakh respectively. According to the partnership deed, interest on capital, Rizwan is to get a salary 50,000, then 10% commission after interest on capital salary. Then after charging such commission, profit sharing ratio 3:2. During the year, the firm earned a profit of 3 lakh. Prepare profit and loss appropriation account. The firm closes its accounts on 31st December every year. So here I will show how it is done. Very simple. Only one calculation that I will explain to you. Okay, profit and loss appropriation account for the year ended 31st December 2018. It should be credited with the profit and loss account. Then interest on capital, how much? 6%. Then their capital 3 lakh, 2 lakh. We have to calculate, isn't it? Then salary. Rizwan gets a salary. So to salary to Rizwan. Then commission, Richard. Here after interest on capital and salary to Rizwan, and after charging such commission, this commission that we learned before, isn't it? So here now you have to calculate the amount difference. Okay, before this amount 20,000, here 3 lakh minus this 80,000. Okay, 3 lakh minus 80,000, we will get 2 lakh 20,000. From that 2 lakh 20,000 only, we have to calculate the commission after charging his commission. So what is the rate? Rate divided by 100 plus that rate, isn't it? So 2 lakh 20,000 into 10 by 110, we will get 20,000. Again, now you write that 20,000. Now you calculate the profit. Then if we reduce that 20,000, we will get 2 lakh, isn't it? That 2 lakh must be divided among the partners in the profit sharing ratio. That the ratio is 3:2. Okay, 3:2. Okay, now we have completed the chapter. So here we have here you have three problems. Okay, 21, 22 and 23, each one in the same order. First one 2 adjustment, then 5 adjustment, the last one what I have explained to you. Okay, so you do this one and keep your note update. Okay, complete. Then tomorrow onwards I will teach you the next lesson, goodwill in partnership accounts. Okay, this lesson is also very easy one, like third lesson. Not even third lesson, maybe many calculations are coming. It is not much difficult. Okay, not easier than that one, third lesson. Okay students, so you complete the problems. Any doubt, you call me and ask for clearing your doubts. Okay students, thank you very much.